Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil gains while stocks lose momentum as traders remain wary ahead of President Trump's latest deadline for an Iran deal. The US president ramps up threats to destroy infrastructure if his demands aren't met, including the reopening of Hormuz. Iran rejects Trump's latest proposal. Plus, returning home, NASA's Artemis astronauts head back to Earth after a record-breaking trip around the moon. Welcome to Tuesday. Let's check in on these markets. It has, of course, been a long weekend for European markets, so we're catching up to the weekend's news here. But global markets also responding to President Trump's speech at 6 p.m. London time yesterday. So we have Asian stocks managing to have gains of 0.5% at the moment. European stocks futures only up 0.2%. But take a look at US futures at the moment, down 0.4% as we head toward President Trump's latest self-imposed deadline. Now, flipping to the cross-asset picture, and we can take a look at oil this morning, climbing again on Brent, up 1.25% to $111 a barrel. Treasury yields are up a basis point at 4.34% on the 10-year, and the Bloomberg Dollar Spot Index is up again just this morning by 3 basis points. So that's what's happening in the markets. But let's take a look at the risk events on the docket over the next 24 hours that could change that picture. We're going to get the latest Spanish and Italian PMI numbers at 8:15 and 8:45 a.m. respectively this morning. We'll hear from the Fed's Austin Goolsbee as well at 5:35 p.m. London time. And then the big one, President Trump's new deadline for Iran to make a deal. That'll be at 8 p.m. New York time, 1 a.m. London time. Let's set you up for the day ahead. Less than 24 hours remain before President Donald Trump's latest deadline on Iran expires. Tehran has so far rejected a US ceasefire proposal sent via Pakistan while demanding a permanent end to the war. Despite being adamant that talks are going well, the US president is escalating threats to obliterate key Iranian infrastructure if his terms are not met.
We have a plan, because of the power of our military, where every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business, burning, exploding, and never to be used again. I mean, complete demolition by 12 o'clock. And it'll happen over a period of 4 hours if we wanted to.
Let's take a look first at how markets are trading as that deadline looms. Mark Cranfield, Bloomberg MLive strategist, joins me now for that. Mark, good morning. It seems like traders are holding their breath as we head towards this deadline.
Yeah, good morning. Very much so. Ed Harrison, and our colleague in New York, described it as a very binary situation, and that's exactly how it feels today. You can tell that people are very wary of committing too much to these markets at the moment. Wherever you look, the moves are small and they're coming back again. People are correcting themselves quite quickly. So conviction is still relatively low, and people are looking very much towards this deadline and what will happen there. Will there be an escalation? As you heard in that news clip, it could be. The threats are quite severe there from President Trump. Or will there be a dialing back, and will everybody be happy to get back on with buying into risk assets again? If you had to pick one side or the other, clearly investors, particularly in equity markets, they are starting to see some value here. They see that these markets have had a correction over the past few weeks, and they may be in territory where, if you look ahead over the next several months, it probably starts to make sense to be a bit more bullish on the markets. But whether people are ready to step in right now, it doesn't look like the case. That could change dramatically within 24 hours. If we see a stepping back by the United States, it looks as though there's plenty of money on the sidelines which is ready to go in there. You can see the start of that in Asia as well today. You look at Korea and Taiwan, even in Chinese markets, people are starting to put a bit of money to work there based on the fact that there's going to be a change in some time in the situation here. And yet, when you look at oil prices, the curve is extremely inverted. People are paying up dramatically for short-term crude in relation to long-term crude. They still see a lot of risk in the near term. And it's not good for the bond market as well. We'll probably get onto that in a moment. And the US dollar is still fairly strong. So the major themes which we saw prevailing throughout March, they're still in place. And yet investors probably aren't holding the same level of conviction that they had a couple of weeks ago.
Well, you touched on the bond market, Mark, and we did see quite tepid, muted demand in that 30-year JGB auction. What does that tell us about the upcoming Treasury supply?
Clearly, long bonds in particular are having a very difficult time. Selling new supply of G10 bonds wherever you are is going to be pretty difficult in this environment. Yield curves are steep. People are uncertain about where inflation is going. Oil prices will probably contain a premium for the Middle East for quite a long time. So Japan today, even though 30-year yields were near the highest they've been for a couple of decades, demand was still pretty weak for today's 30-year auction. And the United States has a 30-year coming up on Thursday. It's a very tricky time to be selling long bonds in the US as well, particularly as they're looking to increase defense spending as well. So a very difficult time for fixed income investors to try and put a lot of money to work here. And then you've got the uncertainty of where central banks are going to go as well. Clearly, there's a risk that there could be some policy tightening if inflation levels stay higher for a longer time. A very tough week to be selling 30-year, even 10-year bonds this week. And the Treasury auction, if you look at what happened in JGBs today, people will be a bit reluctant to throw a lot of money to work in a new auction of bonds, and a fairly large one as well, until they're absolutely clear where President Trump is going to direct markets over the next couple of weeks. So tough times for bond traders. That's why a lot of money is staying in the short end of the curve, in the cash end, maybe up to the 1-year maturity. And of course, some of it's going to the US dollar, which is pretty firm as well.
OK, well, we hope, perhaps in vain, for more clarity over the next 24 hours, Mark, on the Middle East situation. But for now, Bloomberg M-Live strategist Mark Cranfield, thank you very much. Well, diving into the geopolitics, President Trump is insisting that any deal with Iran must include freedom of navigation through the Strait of Hormuz. He laid bare the potential consequences that Iran would face if it fails to reach an agreement, including attacks on civilian infrastructure. For more, I'm joined now by Bloomberg's Washington Deputy Bureau Chief Laura Davison. Laura, is this a harder deadline than previous deadlines that's set by President Trump? What are the president's options if a ceasefire isn't reached by 8 p.m. Eastern?
So Trump himself has suggested that this might be a harder deadline. He says he's not going to move it. He's not going to change it. We're 20 hours out or so, and this is still held. I'll note, though, that we have had 4 or 5 deadlines in the past that he has blown right through, and they have been essentially meaningless. All these are deadlines that Trump himself has set. So there's no forcing action, if he decides to not hold himself to this 8 p.m. Eastern time on Tuesday deadline. But what he's talked about is, shortly after that deadline hits, some sort of very swift bombing campaign to target Iranian infrastructure, things like bridges, power plants as well. I'll note that would likely violate the Geneva Convention and constitute war crimes. Trump has also addressed that specifically, saying he's not concerned about it. In previous remarks, he said he's only guided by his own morality here. But this would indicate a large escalation of this war. Iran has also suggested that it would continue, it would respond in kind, targeting similar sites in Gulf allies. So this is, potentially a real pivotal moment if Trump does go forward with this deadline, does hold to, his threats here, and would mean that potentially a much longer war to continue for several weeks, if not months.
Laura, is there a reason that President Trump isn't so worried about being prosecuted for war crimes? In reality, is it actually not likely that he would be prosecuted?
Trump has a really incredible record of being able to avoid legal problems, both domestically and internationally. Trump is also, very much his style is, let's address the problem and use the tools at our disposal that we want to tap right in front of us and worry about long-term consequences later. That is a strategy, to varying success that he's used in both his business career and political career, but very much in line with how he views the world, of that the norms and rules don't apply to him, and he will, deal with any consequences down the road.
OK. Bloomberg's Washington Deputy Bureau Chief Laura Davison, thank you very much for the update. Well, turning to the Middle East side here, Iranian state-run media say that the Iranian country is not being deterred in its offensive against the US and Israel due to President Trump's ultimatums. A military spokesperson says that the US president's threats stem from being trapped in a deadlock. Let's now bring in Bloomberg Horizons anchor Germana Besetchi for more. Germana, are there any signs that Iran is more likely to agree to a ceasefire with this new deadline when, it already rejected the last ceasefire proposal?
Well, what we do know is that there was a last-ditch mediation attempt that went through over the weekend, and that was spearheaded by Pakistan, messages relayed from one side to the other. But Iran, once again, rejecting the terms for the ceasefire that have been put forward by the U.S., and this has been reported widely through Iranian state television over the course of the weekend. And they, in counter to that, have put forward their own set of demands of what they would like to see, a sort of reiteration of what they had been insisting on before, including a full cessation of hostilities, so not just a temporary ceasefire, but a permanent end to the war, assurances that the U.S. and Israel would not strike again, a complete lifting of sanctions, and then a new term that has also been set, according to New York Times reporting, insisting that Israel also stop their operations against Hezbollah. And then when it comes to the matter of the Strait, also in this New York Times article, they're suggesting that Iran want to maintain this effective control that they have over the Strait of Hormuz. They're proposing a $2 million per voyage fee for any ship that wants to transit through. That fee would be split between Iran and Oman, and then the proceeds would be used for reparations. So this is what they're putting forward. But of course, a lot of this is non-starter for the U.S. They're very, very far apart in terms of what the U.S. is demanding, what the Iranian side are demanding as counter to that. And so the chances of a diplomatic breakthrough as we get closer and closer to that deadline seem to be quite slim.
Well, yeah, we know that the UK is going to be hosting a military planning meeting of more than 40 countries to try to secure safe passage in the Strait after the war ends. As you say, President Trump insisting that the reopening of the Strait is a condition to end the war. Where are analysts saying that this is likely to land when it comes to the future of the Strait?
Yeah, well, there's been a clear relinkage now of the U.S.'s war efforts and the opening of the Strait of Hormuz. So that's become apparent, especially with that very, how can I say, explosive social media post that came through from President Trump on Sunday with the threats. And it was quite clear that the U.S. want to see Iran reopen that strait. At the same time, President Trump has also expressed his disappointment at some of their key allies around the world, at NATO, for not helping sufficiently with the reopening of that strait. And so what we've seen is several efforts led by the UK last week. The Foreign Secretary, Yvette Cooper, had a virtual call with about 30 countries last week. Another one is set to take place today, reportedly with around 40 countries attending as well. And not just NATO countries, but countries from around the world, European, including Arab states and the UAE too. And there, the focus really is going to be on diplomatic means to help reopen the straits. And ultimately, if that doesn't work out, then economic, i.e. potentially going down the sanctions route. But there has been very little desire expressed by any one of these countries not involved in the war to get involved in the war militarily. That being said, an outcome in which Iran still effectively maintains control over the strait is not something that is acceptable to many nations. And we've heard more from Gulf states over the weekend as well. The UAE been very vocal on this point. They've likened it to economic terrorism. Its senior diplomatic advisor, Dr. Gargash, was saying that the UAE would very happily, voluntarily participate in an international maritime coalition to help reopen the strait. Bahrain as well, lending their support there, though they've modified the language that they put through at the Security Council so that it removes the word reopen by force. And ultimately now it's a question of the details and what each one of these countries can bring to the table in terms of assets to allow for that reopening. But the best resolution for all of this is an ultimate end to hostilities whereby Iran themselves unilaterally say that they will allow for the safe passage of vessels through the strait.
Bloomberg Horizons anchor Germana Besetchi, thank you for walking us through the latest there. Well, still ahead, markets have whipsawed amid all of the uncertainty ahead of President Trump's deadline for Iran. We'll be discussing the outlook with Sharu Chanana, Chief Investment Strategist at Sachs, later on in the programme. But first, what comes next if President Trump does follow through on his latest threats against Tehran, should they fail to reach a deal? We'll discuss with Niamh McBurney from Control Risks. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Now, President Trump has threatened Iran with, quote, all hell if the Strait of Hormuz is not reopened by tonight's deadline. With Iran rejecting the latest US proposal, Trump faces a credibility issue if he backs off again. Niamh McBurney, Associate Director at Control Risks, I'm pleased to say, joins us now. Niamh, thank you for making time for us. I wonder if you think that traders are right to interpret President Trump's repeated deadline delays as a sign that de-escalation in the Middle East is inevitable.
I think it's a slight misunderstanding of the dynamics here, to be honest. I think President Trump has been incrementally extending his deadlines for a couple of reasons. The first is that to try and buy time for diplomacy. The president always likes having options on the table, and diplomacy, even though it seems incredibly unlikely, genuinely to us at this point, it is an option nonetheless. But it's also a slight misreading of the kind of US military buildup that we're seeing in the region. Senator Tom Cotton posted on Twitter, or X, I should say, about 5 hours ago that the 142nd Field Artillery Regiment was being deployed from Arkansas, yet another sign that we're seeing quite a reasonable build-up, I should say, of military support. And that's going to take a little bit of time to arrive. So in having these incremental deadline extensions, it also buys the US military time to put in place what it needs. So I think the market's kind of slightly misreading it there. And ultimately, we're probably not going to see a de-escalation for at least 4 to 6 weeks at this rate, given where both sides are pretty fundamental in their positions, and they haven't changed.
But is your sense that Iran takes the US less seriously each time President Trump delays a deadline?
It's certainly going to be one of the contributing factors that make this more difficult, right? Is that he seems slightly less credible every single time. But, senior Iranian political and military leaders speak English, they read the English language press, and they have a very full understanding of what the domestic dynamics are in the US and then how the president is perceived internationally. So they understand what's going on here, but it's also an opportunity for them to use it to their advantage.
Yeah, do you think that there's a risk Tehran overplays its hand here and misses the opportunity to get concessions off Washington?
So that question is based on the premise that Iran is looking for a de-escalation, and I don't think, to be honest, right now they are. They're in a significant position of leverage. They have the upper hand militarily, and they have been extremely consistent on their grounds for, before the war, whether it was a kind of renewed nuclear agreement or now the components that would end the war that are basically identical as to the 26th of February with the talks in Geneva. Ultimately, the answer to the question is no.
And realistically, can you see the Trump administration agreeing to the sort of financial concessions that Iran is asking for in a settlement?
So it's a really good question. And I think we need to keep an ever so slightly open mind about this. There is a world in which, because of the president's inclination to make deals and to make deals that are financially beneficial to America, there is a world in which we could see some sort of shared control of the Strait of Hormuz. But nonetheless, I want to say this is really quite unlikely. But it's certainly possible that Iran could design a deal that would be at least of initial interest to the president. But as the Gulf states have made clear, the UAE and Bahrain in particular, that they will not countenance Iranian control of the strait. So any kind of joint agreement, and as Jomana potentially just said, that there's one that's being touted between Iran and Oman, that would also be pretty unconscionable as well for the rest of the Gulf countries. So ultimately, kind of not a particularly positive outlook there.
You talked about the buildup of troops. I wonder what you think the main aim militarily, strategically, of a ground operation would be. You would think that if you have troops on Karg Island, they just become a fixed target. Would it be more focused on the Strait of Hormuz? We know that President Trump has made big threats about bombing civilian infrastructure as well.
So the president has that is quite concerning, and we have seen an incremental increase over the last 3 or 4 days of US and Israeli airstrikes targeting sites that could be considered kind of akin to kind of civilian usage. But we have also seen that, in response in the Gulf states by Iran as well, and that kind of shows the broadening intensification of the conflict that we are experiencing, and we will continue to experience over the next couple of days. But really quite a difficult environment in all, and really quite challenging.
Niamh, thank you for the analysis. That's Niamh McBurney, Associate Director at Control Risks. Well, coming up on the programme, robust demand for AI chips drives Samsung's record preliminary operating profit. We'll get you more on that next. This is Bloomberg.
I think Europe has fallen behind, in this space. I think when you look at the amount of innovation that takes place inside either the U.S. or China, Europe has fallen behind. I think some of it isn't actually at the big company level. I think some of it is at the startup company level.
CEO Rene Haas speaking there, warning that Europe risks falling behind in the global tech race. And you can watch more of that exclusive interview on the next episode of Bloomberg Tech Europe. We'll ask, can ARM pull off its biggest shift yet as the company starts building its own chips? That's this Friday at 8:30 a.m. UK time with Bloomberg's Tom McKenzie. Well, now to some of the other stories we're following for you this morning. Samsung has reported a far stronger than expected 8-fold jump in quarterly profit. The company reporting preliminary operating profit of $37.9 billion in the March quarter, up 755% to a record. The results underscore robust demand for AI memory chips, even as markets are roiled by war in the Middle East. Elsewhere in tech, Anthropic has said that its revenue run rate has now topped $30 billion. That's up from $9 billion at the end of last year. It's also confirmed plans to work with Broadcom and Google to power its burgeoning operations. The AI startup said demand for its Claude services has accelerated, with more than 1,000 business customers now spending over $1 million on a year. And Bloomberg has learned that tech rivals OpenAI, Anthropic and Google are working together to clamp down on Chinese competitors, extracting results from cutting-edge US AI models. The firms are sharing information through the Frontier Model Forum, an industry non-profit founded by the three companies, along with Microsoft. Sources say that the goal is to detect so-called adversarial distillation attempts that violate terms of service. Well, those are some of our top stories with a tech theme this morning. But let's just check in on the futures picture as we head towards the start of European trading. Pretty flat on Euro Stoxx 50 futures, but we are seeing gains in the Asian session. That mood set to stop today, though. We are heading towards President Trump's new deadline, and we are down 0.4% on Wall Street futures. Coming up, we'll speak to Sharu Chalana, Chief Investment Strategist over at Sachs. So stay with us for more on the markets. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil gains while stocks lose momentum as traders remain wary ahead of President Trump's latest deadline for an Iran deal. The US president has been ramping up his threats to destroy infrastructure if his demands aren't met, including the reopening of the Strait of Hormuz. Iran rejects Trump's latest proposal. Plus, returning home, NASA's Artemis astronauts head back to Earth after a record-breaking trip around the moon. Well, a very good morning if you're just joining us. It's 6:30 a.m. here in London, and this is the picture in markets. So you are seeing optimism in the Asian session. Stocks up 0.4%, but it looks like that mood is set to stop there because we have Euro Stoxx 50 futures pretty much flat, and as we head towards the Wall Street Open, futures pointing south, down 0.5% on S&P E-minis. Now, flipping over to the cross-asset picture, as we head towards that 1 a.m. London time deadline, new deadline set by President Trump, we do have Brent up again by 1.7%, $111 a barrel. The 10-year Treasury yield up 2 basis points now at 4.35, and the Bloomberg Dollar Spot Index inching a touch higher. We're checking in on the front pages this morning. Let's kick off with the Financial Times, shall we? Its top story this morning has US President Trump warning Iran that it could be taken out in one night. The president ramping up these threats to target civilian infrastructure if Tehran doesn't come up with a deal with Washington, which includes reopening the Strait of Hormuz. Now, you won't be surprised, this is the same theme on the front of the Wall Street Journal this morning. They're leading with hopes fading among negotiators that Iran will meet President Trump's demands to reopen the strait before this deadline. Now, the paper says that some US officials believe there's too wide of a gap between the positions of both sides to reach an agreement in time, something that Jemana Basechi was touching on earlier. But just flipping over to the New York Times, they're saying that President Trump has told Iran that a ceasefire proposal put forth by mediators was a good step, but that it wasn't good enough to halt any attacks on civilian facilities before his self-imposed deadline. So they're the front pages, and you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Well, diving back into the market impact of the latest in geopolitics, we have oil higher for a third day as President Trump escalated his threats to obliterate key Iranian infrastructure if his terms aren't met before tonight's deadline. Iran has warned that it would respond by ramping up its own attacks on energy infrastructure in the Persian Gulf. Let's bring in Bloomberg's Middle East energy reporter Anthony DePaula now for more. Anthony, good morning. If President Trump does move into decimation mode, where do analysts expect oil to rise to?
Good morning, Lizzie. Yeah, exactly. That decimation mode is clearly going to be an escalation, and that's going to put more risk into oil. So we would expect to see oil spiking if something like that happens. So we have seen a lot of susceptibility in oil prices to the headlines to specific attacks on facilities. We have seen continued, so far, not to minimize, but lower level attacks on facilities, kind of one-off strikes here, there, kind of a continuous thing over the past month on facilities in the Gulf countries that have knocked out some capacity, particularly in LNG, taken some refineries off the market, taken some gas plants off the market. But what we're talking about now would be more of a wholesale strike on lots of facilities together. Of course, that's what President Trump is threatening and what the Iranians are threatening as retaliation. And we will see if they've got the wherewithal to make coordinated and consistent attacks on multiple facilities. But the Gulf countries are very reliant on their desalination, as well as those power plants. And largely it's coastal based because the Arabian Gulf countries are the Arabian Peninsula countries, are right on the Persian Gulf waters there. They're right along the coast. So it could have a big impact, just like the chemical plants, the refineries that Iran has been hitting. So we've seen oil coming up. We're well over that $100 mark now for a few weeks, and we see some more risk in the price. So we would expect it to spike even higher if we do see those kind of coordinated and widespread attacks on that civilian and energy infrastructure, Lizzie.
And Anthony, we had this symbolic hike from OPEC Plus over the weekend. What was the message from members, really, when it comes to how long it'll take to rebuild energy infrastructure? Because, of course, that's going to feed into the inflation impact around the world.
Yeah, of course. And I think that was probably the more significant message there, that they were saying there's a risk to really a longer delay if there is more of a hit on the infrastructure there. So they're really putting the focus on the risk to infrastructure, the risk that attacks on that infrastructure extends this kind of crisis in the oil markets that we're seeing, their paper increase was already in question even before the war, because a lot of the OPEC plus countries just simply didn't have additional capacity to add barrels. So one thing that OPEC plus had been going through this year was reviewing members' ability to produce oil and see if they reset those baselines, those production quotas. As it stands, we've seen production cut in the Gulf, barrels shut in. So really, when they're talking about increasing production, it's only going to be on paper for now. They won't be able to produce that. We would expect that once this war ends and Hormuz opens and those countries are able to export, that we would see them come roaring back with as much capacity as they can bring back on the market very quickly. And again, getting back to OPEC's Plus's points and to your question, that is the real question: how much of that capacity is going to be damaged, and how hard is it going to be able to bring that back quickly once we do have a resolution, Lizzie?
Anthony, appreciate the update. That's Bloomberg's Middle East energy reporter, Anthony De Paula. Well, it's not just oil, of course. 2 liquefied natural gas tankers from Qatar in the Persian Gulf have appeared to abort an earlier attempt to leave via the Strait of Hormuz. The vessels have U-turned away from the strait and are now listing Pakistan as their next destinations. Each had loaded LNG from Qatar's export plant in late February, according to ship tracking data. It's also reported that Britain will today host a military planning meeting of more than 40 countries willing to secure safe passage in the Strait of Hormuz after the war in the Middle East ends. According to the Financial Times, the virtual conference will include France, Germany, Canada, Japan, South Korea, Australia, the UAE and others. Well, of course, investors are closely watching President Trump's new Tuesday deadline for Iran. Uncertainty over escalation risks and oil supply disruptions has pushed up energy prices and fanned concern over faster inflation. Joining me now is Charu Chanana, Chief Investment Strategist at Sachs, for more analysis. Charu, really good to have you with us again on Daybreak Europe. I wonder if you think that traders are still too desperate to latch on to the idea of de-escalation here, even if it takes escalation to get to that de-escalation.
Hi, Lizzie. Thank you for having me back. No, absolutely. I think if you look at the markets right now, there is obviously some sense of defensiveness. You know, there are hedges in place, and there is a lot of, confusion as to where this thing goes next. But you're so right to point that out, right? I mean, this is not still a state of full panic in the markets. I mean, even if you just look at the oil markets in particular, that have been the center of attention during this conflict. We do have that swing higher in oil prices, but if you look down the curve, there's still backwardation. The forward pricing still suggests that we're going to get back to kind of sub-80 levels through the course of this year. And even in the equity markets, of course, we've had a correction. So there is some fear that is there in the markets, but I wouldn't say this is a state where markets have priced in a very large-scale escalation or a lot of panic. And I think traders are, like you said, right? They are actually still looking ahead at those dates that we continue to get from the U.S. administration about whether a deal can happen or not.
So some fear, but perhaps not enough, Charu. Meanwhile, when we look at treasuries, are they underestimating the growth and inflation impacts of this war?
Again, given that the impacts have been, so far and wide, the oil story certainly started with what kinds of an impact that can bring on inflation. And we do get that first full picture of a CPI report for March from the US this week, which will be very, very important to watch because, when you get that jump in oil prices, it's not just the oil or the gasoline that reflects it. It's really the broader basket that kind of starts to get affected. So the treasury yields did reflect that inflation scare, the fact that the expectations around Fed rate cuts have completely been moved out from this year, not even next year. So I think that really reflects that inflation was the first point of concern. But over the course of last year, this has started to look a little bit more like a growth scare as well. And then again, that's leading to treasury yields coming down a little bit. But in that sense, I do think that, given that this is going to be a mix of growth and inflation scare, I think investors are starting to consider whether not a full, but maybe a little bit of a lighter version of stagflation risk is something that they need to position for from here.
So where do you hide from the geopolitics then? Do you just sit in cash? Do you like gold, for example?
Obviously, I mean, again, given the volatility, that is certainly a concern. But what this kind of, pushing of deadlines, having the kind of, requirements from two sides which look so far apart has made it a very difficult market to trade. But certainly, I think the strategies that work in this kind of an environment are also the ones that, that would really demand moving to more quality, more, especially if you're an equity investor, moving to stocks that have pricing power. Really upgrading that equity exposure is really the key here, because even if we were to get that de-escalation, the kind of timeline it takes to really, bring that inflation impact to get over with that inflation impact is not going to be potentially short. Then we are also going to be looking at impacts on, what kind of US political impact we see, what kind of relationship we see for the US with its alliances, right? So I think a lot of things to still consider, which means that there will be potentially more long-term volatility in the markets, even if we were to get an immediate de-escalation at this point. So I think upgrading equity exposure is important. But at the same time, when you look at safe havens, I don't think gold has particularly worked as a clear safe haven in this trade, particularly because of that inflation risk that has come through as well. And I think we need to be watchful of that risk for gold. Instead, what remains very important from a more structural standpoint as well is real assets and commodities, because when you go back to the real AI story that has been driving the equity markets even before this conflict broke off, that might see some bumps because of the inflation risk, because of the supply chain risks, but investing in that infrastructure and commodities will remain very, very important.
OK, but just going back to US stocks, I wonder if US profit projections, which really are responsible for a lot of the resilience that we're seeing in the S&P 500, are going to be downgraded, and it's just a matter of time when you see oil prices this elevated.
Absolutely. Again, going into this earnings season, I think that would be the key thing to watch, what kind of a commentary we start to get from the management of the companies about the risks that they're facing on their supply sides. And, what does that lead to in terms of the expectations on their earnings in the forward quarters as well. So certainly some of the areas that are heavily exposed, for example, again, going back to the tech and the AI sectors that have been the biggest drivers of the equity markets in the US over the last several years, are they facing some kind of a supply constraint on their, chips and the components there? I think that will remain a very, very important focal point. I don't think the earnings season this quarter will be about what really companies managed to deliver in the first quarter, but really about how they see this conflict evolving from here and how that impacts their supply chains.
Charu, always great to get your analysis. That's Charu Chanana, Chief Investment Strategist at Sachs. So thank you very much. Well, coming up on the programme, NASA's 4 Artemis astronauts are headed home from the moon. We'll bring you all the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London. Now to some corporate news this morning. JPMorgan CEO Jamie Dimon says that the US needs to get stronger to maintain its military and economic might. In a letter to shareholders, he says that many companies will only thrive if their countries thrive. Dimon detailed his bank's plans to deploy more than $1 trillion to bolster US economic security and resilience over the next decade. Meanwhile, Goldman Sachs says that a reliance on stickier, more patient institutional investors rather than wealthy individuals has helped its $15.7 billion private credit fund narrowly escape the broader exodus plaguing peers. Morgan Stanley, meanwhile, says that it plans to debut an interval fund investing in a wide spectrum of credit strategies. And shares of Blue Owl Capital closed at a record low yesterday, capping weeks of declines fueled by mounting concerns over the health of the $1.8 trillion private credit market. Last week, the firm said that it would limit redemptions from 2 of its private credit funds following a surge in withdrawal requests. So those are some of our top corporate stories this morning. And now to space. NASA's 4 Artemis astronauts are headed back to Earth after a record-breaking journey behind the moon. The Orion capsule came within 4,067 miles of the lunar surface, the closest humans have been in over 50 years. For some context now, we're joined by Danny Lee, Bloomberg space, aviation and defence reporter. Danny, good morning. You've got the mission still underway, but how significant are the milestones that it's already achieved?
Hey, Lizzie, good morning. So the Artemis 2 spacecraft, it managed to reach a maximum distance from Earth of over 250,000 miles. And that has beaten a record that has stood still for over 55 years. And all in all, when you look at how the astronauts have managed this mission so far, they managed to get as close as you said, 4,067 miles from the moon's surface. So a pretty cool view that they would have had from space of the moon, and something like a basketball-size view in their outreached hands. Now, they had some communication blackout overnight. That was expected for around 40 minutes, and that kind of signaled the second half of their trip as the spacecraft does return to Earth now. So they are halfway through a 10-day mission, and so far, it looks like it's been successful.
And so far, Danny, what has Artemis proved for NASA's long-term plans?
Well, for NASA, this is a critical test flight, a dress rehearsal, as it were, to show that its systems can handle humans in deep space and to make sure that they can be returned safely. And overall, there is a goal that by 2028, that NASA will be able to get Americans back onto the moon's surface. And there is a time pressure now with the likes of the US companies involved, the likes of Boeing and Lockheed Martin, and also for the newish NASA administrator, Jared Isaacman. He's a former astronaut himself. He was appointed by President Trump. He's been trying to shake up the timelines to try and get this Artemis program kind of back on a schedule. And the reason why is because you have the likes of the Chinese who aim to get onto the moon again in by the end of a decade. The US now wants to try and get there before China. So ultimately, this feels like another space race as they try to stick to a very ambitious 2028 deadline.
So what are the next key steps that need to happen, Danny, before NASA can attempt that crewed landing?
Well, we have another space mission, a test flight, Artemis 3, that will take place next year in 2027. And that will test some of the docking procedures of not just the Orion spacecraft, but also of other commercial options. But these all really will help ensure that there are options so that the US can get back onto the moon's surface. Now, you have the debate from the likes of former astronaut and Democratic Senator Mark Kelly, who believes this 2028 timeline is just too ambitious. But you have the likes of the Republicans and Senator Ted Cruz, who believe that there is a strategic imperative, regardless, to get back onto the moon as soon as possible, because the likes of China, if they get there first, it would look ultimately quite a contrast to the US's efforts. But for now, Artemis program, it is over budget and behind schedule. So far has spent $93 billion, which is a bit of a blowout. And the fact that Jared Isaacman wants to spend another $30 billion over the next decade, potentially have a base on the moon's surface. So there's a lot of spending and a lot of ambition in what the US wants to do. But this clearly is a complex challenge as they try to get deeper into space.
Well, you said that the 2028 timeline was ambitious, Danny. Is it realistic?
Given the time pressures and the missed deadlines, we are already behind by a couple of years. The fact that under the new administrator in Jared Isaacman and with the likes of Trump, President Trump watching very closely, maybe it's hard to tell at the moment. To be frank, it remains to be seen. But ultimately, they are pushing forward and they are pushing ahead. So even if they do miss it by months or so, there is still that concerted effort, and they could still get very close to sticking to that timeline.
All right, Bloomberg space, aviation and defence reporter Danny Lee, thank you very much for that analysis. We'll have plenty more coming up. We'll set you up for the day ahead with the best charts from the terminal. So don't go anywhere. This is Bloomberg.
A lot of the supply chains are only now beginning to feel the increase in prices. And so unless there's a very, very rapid lifting of the clouds from the Middle East, I think we have to expect ongoing, probably increased inflation as the effects come in various timescales. We'll see. We are seeing various commodities going up now.
Former US Energy Secretary Ernest Moniz there warning on the inflationary impact of the Middle East war. And of course, the longer this war goes on, the greater the inflationary risk from it. But as you can see from betting market odds at the moment, this is a poly market, the chances of a peace deal by July are looking like nearly a coin toss at this point. Let's see how they change after tonight's deadline. 1 a.m. London time is the new self-imposed deadline from President Trump. But if we flip the board over, really at the moment it seems like financial markets are more focused on the real-world movement of oil barrels through the Strait of Hormuz, which, as you can see, have slowed right down to a trickle at this point. And those automatic identification systems, it should be said, have been switched off a lot of times for ships crossing through. But still, these numbers really, really minimal nonetheless. Now, flip the board over, and when we talk about the economic impact, we already had the payrolls data last week, so just diving into those numbers, stronger than expected. And as you can see, actually, it was a case of broad hiring across sectors, and this is what weighed on those Fed cut bets for the rest of the year. It seems like President Trump will not be getting his cut after all. Now, to access, search and save all of the Bloomberg terminal charts used on this show and across Bloomberg TV, terminal subscribers can use the function CHRT TV Go. But we are going to get more data this week. Let's just look at the risk events ahead. We have the latest Fed minutes on Wednesday. Well, they have more of a hawkish tone. Then on Thursday, we have industrial production figures out of Germany. And on Friday, it's US CPI, expected to spike to its highest since 2022. Now, on the subject of inflation, Bloomberg's Mike McKee has an exclusive interview with the New York Fed President John Williams. That'll be live from the Federal Reserve Bank of New York. You won't want to miss that at 1:30 p.m. London time. But coming up next, Guy Johnson's back alongside Anna Edwards. They'll take you all the way to the Open. This is Bloomberg.